Hey everyone, welcome back to Corporate Decoder, the place where we learn how to read between the lines, but sometimes the lines tell us to brace for impact. Today we're diving into a filing from Sonim Technologies Inc., and it's not exactly a happy shareholder letter. It's a Form 8K, which usually means something important just happened, and in Sonim's case, that something is a warning from the stock market itself. The big news here is that Sonim received a letter from Nasdaq, the stock exchange, where their shares are traded. This letter is basically a heads up that the company isn't meeting Nasdaq's rules for companies to stay listed. Imagine getting a letter saying you're almost kicked out of a club you paid to be in, and it's Nasdaq saying that. Nasdaq has rules to make sure companies are stable and healthy, like a minimum level of stockholders' equity, which is basically what the company owns minus what it owes. For Sonim to keep trading on the Nasdaq capital market, they need at least $2.5 million in stockholders' equity. According to their own report, their most recent one, filed as a Form 10Q at the end of June 2025, Sonim's stockholders' equity was just $1,334,000. That's quite a bit less than the required $2.5 million. So they failed that test, but it gets worse. Nasdaq also looks at other things like how much the company is worth overall in the market, which they call market value of listed securities. If that's not high enough, they look at profitability. Sonim didn't meet the market value threshold either, nor did they meet the profitability requirement. So they're essentially failing on multiple fronts when it comes to Nasdaq's continued listing rules. Now, don't panic just yet. This letter doesn't mean their stock is immediately delisted. Their common stock is still trading on the Nasdaq capital market under the symbol SOM. Think of it as a warning shot, giving them a chance to fix things. Nasdaq is giving Sonim a grace period. They have 45 days from August 22nd, which is until October 6th, to submit a plan showing how they will fix the problems and get back into compliance. If Nasdaq likes the plan, they might give Sonim up to 180 days or about 6 months to actually show they've met the requirements. But, and this is a big but, the filing makes it very clear that there's no guarantee their plan will be accepted, or that even if it is, they'll be able to actually fix the issues within the given time. They're also facing the possibility of having to appeal any decision to reject their plan, which could involve a hearing. It's a real nail-biter situation. The rest of this document is filled with what they call forward-looking statements. This is basically legalese for we're guessing about the future, and you shouldn't sue us if our guesses are wrong. They talk about their hopes of submitting a plan, getting an extension, and hopefully avoiding delisting. But as they themselves say, there's no assurance any of this will happen. It's all very standard, but also very cautious language because the situation is so uncertain for them. So what's the real story here? Sonim Technologies, a company whose stock is traded on Nasdaq, has been told they are not meeting the financial health requirements to stay listed. Their own financial reports show they are below the minimum equity and market value thresholds set by Nasdaq. They have a chance to submit a plan to fix this, but the odds are definitely not in their favor, as the filing itself admits. This is a serious warning sign for investors. It means the company is in a precarious financial position and the risk of their stock being removed from Nasdaq, which would significantly reduce its liquidity and potentially its value, is very real. It's a classic case of a company struggling to keep its head above water in a competitive market. Now, looking at these numbers more broadly, Sonim is clearly in a tough spot. The failure to meet basic listing requirements suggests deeper financial challenges. While the company is hoping to present a plan to Nasdaq, the lack of concrete improvements mentioned hints that this could be a difficult recovery. The key risk here is not just the Nasdaq delisting itself, but what it signifies about the company's underlying financial health and its ability to compete and generate consistent revenue. The opportunity, of course, would be if they manage a surprising turnaround, but based on this filing, that seems like a long shot. Alright, that's our breakdown of Sonim Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Do you think they can pull off a Nasdaq comeback, or is delisting inevitable? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description where we discuss these filings in real time. Thanks for watching. See you next time.